Imagine spotting the next billion-dollar investment while everyone else is still completely in the dark. Sounds impossible, right? Sounds like insider trading, right? But it's not. It's smarter than that. Every year, the market rewards a few early birds with massive profits and leaves the rest scratching their heads. From Bitcoin in 2009 to Tesla in 2010, the people who jumped in early weren't lucky. They saw the signs others missed. Today, I'm going to show you how to spot the next big investment trend before it goes mainstream using practical methods you can actually apply. Tip 1. Look for emerging industries. Imagine telling your friends about the next hot stock before it's on CNBC and watching them think you're crazy until they see the numbers. The first clue is always the industry. Think AI, biotech, renewable energy. These are sectors where growth is exponential, not linear. But don't just blindly follow the hype. Look for industries that are solving real problems or creating entirely new markets. For example, 10 years ago, people laughed at electric cars. Now Tesla is a household name and the electric vehicle market is exploding. The early investors, they weren't just lucky, they recognized an emerging industry before it became mainstream. Practical. Spend time each week scanning industry reports, tech blogs, and research papers. Look for areas attracting venture capital and government incentives. These often signal the early stages of the next big trend. Tip 2. Follow the innovators. Here's a secret. The trend usually hides in plain sight, disguised as a weird, small startup or a new app nobody's using yet. Innovators are the first to see a solution where others see chaos. Pay attention to small startups, the entrepreneurs driving them, and the investors backing them. When a few reputable venture capital firms start funding a new concept, that's your early warning signal. For instance, look at SpaceX. Before mainstream media buzzed about commercial space travel, early investors saw the pattern: reusable rockets, cost reduction, and Elon Musk's track record of disruptive innovation. Practical. Track funding rounds on sites like Crunchbase or PitchBook. If a startup receives Series A or B funding from top-tier investors, it's worth noting they often spot trends before the public does. Tip 3. Monitor online communities. If your uncle's friend told you about Dogecoin in 2013, congratulations, you probably still don't have the millions. Don't be that person again. Reddit, Twitter, Discord, these aren't just social media playgrounds. They're often where early adopters congregate. Trends in tech, crypto, and new consumer products often begin in these small online communities. For example, the initial Dogecoin craze started on niche Reddit threads. People dismissed it as a joke, but those paying attention made huge gains. Similarly, NFT communities on Discord have often been the first to spot emerging digital art trends. Practical tip. Identify niche forums in your industry of interest. Subscribe to relevant subreddits, follow thought leaders on Twitter, and monitor conversations on Discord. Early chatter often precedes mainstream adoption. Tip 4. Analyze adoption curves. Here's where most people fail. They see the trend too late, just when the rocket has already left the launch pad. Adoption curves reveal how quickly people are embracing a product or service. Early-stage adoption is usually slow, but when growth accelerates, it's a signal that a trend is about to go mainstream. Take Zoom, for example. Before the pandemic, it was just another video conferencing tool, but adoption skyrocketed as the world shifted online. Those who recognized the trend early saw their investments grow exponentially. Practical. Track user growth on company websites, app stores, or analytics platforms like App Annie. Rapid growth in a short period often signals a trend entering the hockey stick phase. Tip 5. Track influencers wisely. Spotting trends is like dating. You need to be early but not too obvious, and sometimes you'll get burned. Influencers aren't just posting memes, they often provide early insights into industry shifts. For example, tech YouTubers, financial analysts, and industry experts can hint at innovations before the mainstream media catches on. However, beware of hype. Not every trending post is an investment opportunity. Some are marketing campaigns disguised as expert advice. Your goal is to filter the noise and identify signals that have real traction. Practical. Follow thought leaders on LinkedIn, Twitter, and YouTube. Set alerts for topics they frequently discuss. When multiple credible voices are talking about the same emerging concept, it's worth investigating further. Tip 6. Learn to think in patterns. Missed Bitcoin? Missed Tesla? Don't cry over spilled gains. Let's make sure the next opportunity doesn't slip past you. Investment trends often follow surprisingly predictable patterns. It usually begins with early adoption, when niche enthusiasts and forward thinkers start using a product or exploring a market before it becomes widely known. These early movers are often the first to spot real potential. As interest grows, the trend enters the growth phase. More people start noticing, curiosity spreads, and adoption accelerates rapidly. This is when the momentum builds and opportunities begin multiplying for those paying attention. Soon after comes the hype stage, fueled by media attention and social buzz. Headlines, influencers, and viral content drive excitement, making the trend feel unavoidable. Everyone wants to know what the fuss is about, and attention peaks. Finally, the trend reaches mainstream acceptance. At this point, nearly everyone wants in, demand surges, and prices often climb sharply. What started as a niche interest has now captured the broader public's imagination, completing the cycle from underground to ubiquitous. By studying these patterns in past trends, you can anticipate where the next opportunity is headed. This way, you're not blindly chasing hype, you're predicting it. Practical. Keep a trend journal. Track emerging technologies, startups, and investor movements. Note the early adopters and growth patterns. Over time, you'll develop an instinct for spotting the next big thing. Tip 7. Analyze market signals and data. Numbers don't lie, but most people ignore them until it's too late. Market data can reveal hidden trends before headlines do. Unusual trading volumes in specific stocks or crypto coins. Increased search interest on Google Trends. Rising social media mentions for certain technologies or products. For example, before the NFT boom in 2021, search traffic for NFT art and mentions on social platforms spiked weeks before major sales hit mainstream news. Practical. Use tools like Google Trends, SEMrush, and TradingView to monitor early market signals. Combine this with community insights for a comprehensive view. Tip 8. Pay attention to regulatory changes. Sometimes, the next big opportunity is born not in a startup, but in a law passed quietly behind the scenes. Regulations can create massive opportunities or destroy industries overnight. For example, cannabis legalization in several U.S. states created a boom in stocks, edibles, and ancillary businesses. Early investors who understood the regulatory shift profited enormously. Practical tip. Track government announcements, patent filings, and regulatory changes. Being aware of potential legal catalysts gives you a strategic edge. Tip 9. Think globally. If you're only looking in your backyard, you're missing the Amazon, literally. Some of the hottest trends start in other countries before arriving in your market. For example, mobile payment systems like M-Pesa in Africa or short video apps like TikTok in China saw explosive adoption before global awareness. Practical tip. Watch international news, tech forums, and startup databases. Often, spotting a trend abroad gives you a 6 to 12-month lead before it hits your local market. Tip 10. Take calculated risks. Don't be paralyzed by fear. No risk, no reward. But reckless risk is how dreams turn into nightmares. Even if you spot the next big trend, hesitation can cost you. The key is taking calculated risks. Invest a portion you can afford to lose while diversifying across multiple early-stage opportunities. For example, early investors in Bitcoin didn't put their life savings in. They started small, then scaled as confidence and adoption grew. Practical. Allocate a fixed percentage of your portfolio for early-stage trends. Track performance carefully and adjust as adoption and validation increase. Be the early bird. The next billion-dollar trend is out there, hiding, waiting for the curious and the bold. Were you the one to see it first, or will you watch it explode from the sidelines? If you want more insider insights, early trend spotting techniques, and actionable finance strategies, subscribe now, hit the bell, and join the hunt for tomorrow's big wins before everyone else knows they exist. Remember, in finance, timing is everything, but preparation is everything too.